Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's update our view on the gold market. So actually here we do not have really big events despite the recent speech of Joe Biden concerning the situation in the Ukraine. In general, results that have been brought by the administration was, well, more or less expected, and well, it makes no big impact, and markets come down a bit as overall tensions have been eased slightly. But our view is that this is really temporal thing. It's just because from the geopolitical point of view, it makes no sense just to save some and take some eastern part of the country and leave the rest. It's just because this is the rest of the Ukraine that stands under control of the United States. It will remain as a source of the potential conflict and hazard to the Russia. That's why our suggestion is that Russia intends to resolve the Ukraine problem totally. It's because also some another geopolitical moments exist, is that, as you know, there is some independent region in the Moldova that you could reach by the ground only through the Ukraine territory. And Russia currently has no direct way to reach it. It's just because it has not the mutual border with this region, only by sea or through the territory of the Ukraine. So this is another potential point where the United States could initiate some conflict or something that could be used in the as a geopolitical tool to make the pressure on Russia, and of course it is not suitable for Russia. And I think that well, the things that we see currently is just a temporal thing, and the situation becomes worse a bit later. That is my suggestion. So that's why you can see that in general gold shows, well, no big downside action, no big relief. So market still stands nervous despite the speech of Joe Biden and despite the moments that we have on the cross-market analysis. So if you'll take a look at the same dollar index and 10-year yield, we already talked about this in analysis of the euro currency. So take a look on 10-year yield. On the speech of Joe Biden, yields have turned up, showing reversal bar here, and theoretically they could keep going higher to the level of the 216 probably is the next extension of the butterfly. This should be theoretically bearish for the gold. It's because rising of interest rates is usually the headwind for the performance of the gold. Still, we do not see yet the big drop on the gold as well. On the dollar index, we have the bullish grabbers that suggest some further upward action, but this also makes no big impact, so at least currently. And market is forming tight flag consolidation that stands right under the major or important top. So major top is 1275. But anyway, this is also important top. Usually the tight consolidation without any big sell-off suggests that market is just building an energy to challenge and take out of the top. Besides, those of you who are watching our weekly reports, you know that right above this target, 1926, we have the important ABCD target, the weekly target. And if even market will not proceed higher immediately to the 1950, and watching and showing and will show the wash and rinse around it, or just grabbing the stops above the sellers, showing the some temporal spike, return right back down. Here at this moment, chances on the upward action, some reaching of the completion of this major target looks relatively high. It's just because of the performance of the gold market as well. On the 4-hour time frame chart, you could see what's going on here as well, really tight consolidation, despite some moments of the relief, some statement in the news. We do not see a really big pullback on the gold market. Take in consideration that here we have also failed double repo buy, as we said. And take a look how market reacts on the 1618 extension of this swing. So actually we have a butterfly here, but no significant retracement. In fact, by this butterfly, market has to show retracement to the 1862, which is the 30% support of the whole butterfly, but we do not see it. Really tight, staying right at the top. All these moments together makes us think that we probably, if even retracement will happen later, we probably first should get some spike up. Besides here, we also have the minor targets. Next OPU 1920, as we have here as well. On the lower time frame, on the hourly chart, the bullish dynamic pressure could be seen a bit better probably. As you can see that we have this upside tending consolidation, and the MACD shows the downward action. So you can see some, well, it might be called as bearish divergence, but the problem with the divergence is that the market stands currently not at the strong resistance. The resistance, just to remind you, stands again around 1922, 1924, slightly higher. So all this stuff makes us think that gold should make an attempt to show the spike before retracement might start. So this is our view on the gold market right now.